2 weeks ago, I was at the BMO Mining Resource Conference in Florida, and it was the biggest mining event in the world, where it's just CEOs, CFOs, and money managers. And then last week I was at PDAC, which is the largest mining conference of everything you can think of. 25,000 people from all over the world selling equipment, services, investments, presentations, etc. And clearly the dominant thoughts where everyone was this merger, and then there's a takeover, the battle between Barrick and Newmont taking over Goldcorp. So let me try to summarize so that what appears to be a good thought process. They're going to combine significant deposits, mines, processing facilities, and infrastructure to unlock substantial synergies rather than fight it out in the capital markets. The Franco-Nevada JV will have 3 Tier 1 assets: the Gold Strike Carlin, the Turquoise Ridge, and Twin Creeks and Cortez. Combined, the production is around 4 million ounces a year, and a large reserve base pushing almost 50 million ounces at 2 grams per ton. The Nevada complex will be the world's single largest gold producer, and that is significant. The joint venture ownership will be 62% Barrick and 38% Newmont, with Barrick as the operator, and the Barrick will have 3 representatives. In addition, Newmont will have 2, and then there'll be technical and finance and exploration advisory committees, and they'll be equally represented. So this is much better than having a punch out in the capital markets, and I think it's really important for investors to realize the ownership split closely reflects consensus NAVs for their assets. That is, Barrick has an NAV of approximately $8.3 billion and Newmont is $5 billion. So that therefore the split is not 50-50, even though both are producing approximately 2 million ounces a year. The synergies are estimated to unlock approximately $500 million in the first 5 years. But what's interesting is the mine life's 12 years. I think it's going to be longer, and their synergy program is for 20 years, including taxation. So who knows that by 20 years from now, Marco Bristol will be long gone by that time. But what's really important is that the synergies are projected to come partly from optimized mining processing and partly from supply chain and indirect costs. Now all of a sudden they're going to become the Walmart. They're going to become the Walmart, that is, they can have muscle and power in negotiating, buying new tractors, new haulers, any type of equipment. They'll get pricing power, and that should be a big synergy. So I think for seeing this from day one, who the real benefit is going to be for Franco-Nevada, because they have royalties on this. So that means the Franco-Nevada is going to enjoy sustainable royalty growth and revenue, or a sustainable, consistent revenue from this incredible deposit. It's just very positive for the capital markets, because this is all about peak gold. This is all about trying to drive down costs to basically be able to sustain their overall production profiles of these 2 mega gold mining companies. The Barrick transaction with Newmont as a JV, that's what we should focus on, and those synergies.